When new business owners are starting up, they get tax advice from everywhere and everyone. Their plumber has an opinion, their brother-in-law a tax loophole, and their dentist knows all about deductions. Well-meaning acquaintances are eager to dish out tax advice that may have the CRA breathing down your neck. And no area seems more prone to speculation and error than payroll. Payroll seems to be especially mysterious, and myths pop up that are often damaging to your business. In today's video, I hope to dispel those myths so that you can clearly see the path forward. Myth number 1. Payroll equals full-time employees. Many business owners assume that to hire their first employee, they need to hire a full-time worker. This belief may come from assumptions that all employees want full-time work, or that payroll requires a regular standard salary every 2 weeks. These assumptions are not accurate. You can absolutely hire part-time, on-call, and commission-paid employees. In fact, I often have a much easier time finding and hiring part-time team members during my own recruitment efforts. Payroll is surprisingly flexible. Myth number 2. Sole proprietorships can't have payroll. If you are a non-incorporated business known as a sole proprietorship, you probably have a few more questions about payroll. Many theories pop up in this area, and often business owners assume they must have a formal corporation to have employees. Again, this is not accurate. A sole proprietorship can certainly hire employees. Confusion may pop up around the fact that a sole proprietorship themselves, an owner, cannot go on to payroll. Let's say John owns a carpentry business and is not incorporated. John cannot put himself on payroll. If he does, he could end up being double taxed because the CRA will not allow his own wages to be deducted from his business income. So to clarify this myth once and for all, sole proprietors can absolutely hire employees, but they cannot put themselves as the business owner on their payroll and should not issue themselves a T4. Myth number 3. Your bookkeeping software takes care of it all. Making assumptions around the capabilities of your bookkeeping software is one of the big reasons clients end up with surprise tax bills and huge payroll penalties. Often business owners believe that their bookkeeping software has made payments to the CRA on their behalf. But in reality, the bookkeeping software only recorded a payment in their books and no actual money was sent to the CRA. Yikes. Don't get caught unaware. Before relying on your bookkeeping program, make sure you've taken the time to learn about your software. Myth number 4. Pay cash because payroll is expensive. Let's dispel this myth with an example. Let's say you agree to pay a worker $1,000 every 2 weeks. The extra EI and CPP taxes you must pay is around $74.30 or 7%. The current corporate tax rates for small businesses is between 11 and 13% depending on your province, and the personal tax rates range between 20 and 55% depending on your income level. What this all means is that you are leaving money on the table if you are not declaring your payroll. You are giving up a tax deduction anywhere from 11 to 55%, also that you can save 7% on payroll taxes. As we haven't even considered payroll penalties that the CRA will happily apply should you get caught paying cash under the table, it's not something I'd recommend. Payroll is not more expensive, but it is an administrative burden. If you need help with your administrative requirements, check out our other payroll videos and handouts available on our website. Myth number 5. They won't catch me. Many small business owners are under the impression that they are too small for the CRA to bother with. Well, these same business owners are often shocked at the aggressiveness of the auditors who track them down. Businesses generally end up in hot water when an employee who was paid cash under the table goes to claim employment insurance, or when a subcontractor filled out their tax return listing employment income rather than self-employed, or even when they have miscalculated their payroll remittances and the T4 submitted don't match up to the monthly payroll requirements. Payroll audits are common, and the CRA payroll auditors are very aggressive. Payroll taxes are taken extremely seriously by the CRA, and any funny business can often lead to frozen bank accounts, seized fund, and sometimes even bankruptcy. Don't end up in this situation. As the common adage goes, prevention is the best medicine. So make sure your payroll obligations are met. Okay, that is all I have for today on payroll myths. I hope this video has helped clear through the confusion. I will see you in our next video. Bye for now.